Hey, good morning. This is Mayor Valensky with Driving Markets, driving while talking about markets. Anything said in this piece is an opinion only. Let's kick off. Okay, so crisis, banking crisis, recession are the dominant headlines as far as stock markets are concerned. Two things. Number one, slowdown in the economy, significant, and therefore that's sending concern to Wall Street and analysts that there could be a recession. In my opinion, there is going to be a recession. Not only is there could be a recession, there already is a recession in place, but there could be an official recession by the end of the year. Remember, the central banks and the governments are possibly manipulating the figures. There is a conspiracy theory there, but GDP is in positive territory, and therefore there is not an official recession. If GDP for 2 quarters goes into negative, then there will be a official recession, and it could be well possible that the central governments and the officials are manipulating numbers so they don't show an official recession. There is a possibility, not sure if that's 100% sound, but there is a possibility. Either way, we're in a recession, and we're going to go into a deeper recession, whether officially or unofficially, by year end into 2024. That is sending concern into financial markets. So gold was slightly down, oil was down on the back of those recession fears. Obviously, oil is a major economic indicator. High demand, growth. Low demand, recession. However, with oil, it's very unlikely that OPEC is going to allow the price of oil to fall to a low level and stay there. The probability is that OPEC will cut production more in order to maintain the oil price higher. So we're not going to see low oil prices as far as industry is concerned, as far as that sector is concerned, because OPEC will manipulate and manage those numbers. Talking a little bit about Bitcoin, there is a view, which I don't hold, that Bitcoin is a safe haven as a result of the banking crisis. In fact, Bitcoin went down to 27,600 and now is back above 29,000 on the back of these banking fears. Now, if Bitcoin turns into a safe haven, where will that put gold and US Treasuries? I simply can't see Bitcoin as a safe haven because it's a high risk asset. It's binary. It's either up or down. But there is a view out there that Bitcoin is a replacement for gold, is a safe haven, and is going to get to $100,000 very, very quickly, which could be the case. And if it is the case, then I've missed out on the boat, and I'm sure many other traders and investors have missed out on the boat. But there's many that have said clearly that they've just bought it for the sake of being part of the action. So there's no absolute hard fundamentals regarding Bitcoin. US dollar. So US dollar is being trashed at the moment. It's been under pressure already for the last couple of years, even though last year it did shoot up on the back of rises in interest rates in the US. Euro dollar is at 110, cable is at 124 and 124.5, 124.70, and dollar yen is at 133.70. Okay, so the dollar is going to be under pressure because the likelihood of rising interest rates in the States is effectively over. There will be another interest rate rise, no doubt, at the next meeting, maybe one more after that, and that's about it. 2 reasons. Number 1, banking crisis. Number 2, fears of recession. The economy cannot absorb and not take any more interest rate rises. As a result of that, the Fed, the US Federal Reserve, is unlikely to raise rates anymore, and therefore the outlook for the dollar is more down than up. If there's a banking crisis, as we are in, or continuing deepening of the banking crisis, the dollar will get weaker because the dollar is reflective of the strength of the banks. And if the banks are weak, then the dollar is going to be. So there'll be a flight to gold. Gold's running at $2,000 an ounce. I'm still of the opinion that it's going to go near term to 2040 or 2050 in the near term. As far as precious metals are concerned, look at palladium. That's an interesting one. That sort of hit a bottom and bounced off. Looks like it's going on a next bull run. Talking about First Republic Bank, it's already arranging or looking for a rescue package. That rescue package is going to come in the way of several opportunities. Number one, there'll be a major bank that will take them over. Number two, it will get huge amounts of input of cash from the Federal Reserve, which to the tune of around about $200 billion is what's probably needed for First Republic Bank, and that's only one of the second-tier banks. If the other second-tier banks goes, then you're talking about trillions of dollars going to be needed to save the banking sector. The next bank under that spotlight, as I mentioned yesterday, in the States is Northern Trust. Looks like it's going to go down as well as other second-tier banks. Or there could be a merger with other banks or conglomerate, or could be the end of all second-tier banks and you're going to have first-tier banks. Overall lending in the States is down. The banks are getting far more cautious regarding lending money. They're restricting the lending, they're raising the interest rates, and that's going to put a lot of pressure on business, on corporates, and on individuals. In fact, one of the biggest victims of the rising interest rates is the car market, whether it's the new cars or second-hand cars. The sales are falling, forecourts are closing because the banks are not lending them the money, and therefore those car forecourts are going to have to sell their cars and sell their assets in order to maintain their business. So a lot of forecourts are closing. That is the first indicator of defaults, because as people do not pay their car loans or buy new cars, then the next in line to default is going to be mortgages, whether residential or commercial, corporates, business, whatever the case may be. Corporate mortgages or mortgages generally are going to default, and that's going to put even more pressure on liquidity at the banks and more pressure on the banks, because they simply will not be able to allow these defaults to go ahead. Because if they do and they start repossession, which they do in the States, then there's going to cause a serious collapse in in the property market. That's it for now. You can subscribe, share, comment. Catch you later.